इधर चला मैं. What's up, guys? How are you? Sorry for the delay. Really apologize for the delay because we've been having some power cuts in the society, and then the worst thing is to go live and then a power cut happens while doing the session. And we saw this happening when I was in Goa, so it was a massive issue. But don't worry about it. I will compensate with knowledge, and I will compensate with value, and I will compensate with some free resources for you guys as well. Okay, so don't worry about that. Again, welcome to everyone. Today's episode, just to give you guys an iteration or just to give you guys idea of what we're going to do today. Today's episode is going to be all about dividend investing or smart dividend investing, right? So today we're going to talk about dividend investing and how to do dividend investing. What are the 2-3 metrics to look at while doing dividend investing? These are 2 things that I'm going to talk to you about. Third thing, I'm going to show you a few bunch of stocks that are very high dividend paying stocks. Number three, if you want, I can just bundle it into a small case and just give the link to you guys. But these are all high dividend paying stocks. Number 3. Number 4, I'll show you, if you don't want my small case, then there are professional small cases that are there. I can show you one free, one paid, so that I cover the entire concept and the arena for you guys. Cool. So we're going to do one by one. And I'm going to explain what dividends are. I'm going to explain what everything is in this episode. So are you guys ready for a massive, nice, sweet episode about dividend ratio? And I'll tell you who uses this, not dividend ratio, about dividends. And I'm going to tell you who uses this ratio also. Okay, so you need to understand who uses this ratio as well. So we're going to talk about all of this in today's episode. So I hope you guys are excited. I hope you guys are ready for this. If you are, just put your thumbs up and we'll start this episode. Cool? Awesome. Chalo. Lotus Labs on fire, I know, right? Okay, let's begin. Here we go. First of all, guys, for all the people who were panicking a few days ago about Lotus Labs, it has gone up quite significantly. If you see the ticker going on top here, it has definitely gone up quite significantly in the last few days, just to give you guys an understanding. And I kept saying, don't panic, relax karo, long term ke liye socho. And this is what long term ke liye socho means, right? When it had dropped down, I bought in heavy and it's gone up quite significantly in the last few days. So if you are smart in investing, you will make good decisions in the market. Again, just to give you guys a disclaimer, this is just an educational video, so I'm going to teach you about dividend strategies today. Nothing in this is a buying or selling recommendation, so please do your own research before investing. Awesome. Now, first thing, guys, I know a lot of people are smart here, but I also have to talk to a lot of people who are new to the stock market. So I'm going to talk to you about what is dividends first. Okay, so I'll give you a very simple example of what dividends are. Okay, let's assume it is I have a company called Shashank Udupa company, right? Or Shashank Udupa Investments, which is a listed company, stock listed company. Now I will go and sell some product to a lot of people. I will make a lot of money. Now you as an investor will be a shareholder in my company. So now when you're an investor and a shareholder in my company, it's my duty to keep my shareholders happy because you're buying my stocks. So if I make a lot of money, right, I can do 2 things, right? Either I make a lot of money or I can eat everything. Like I can just take all the money, keep it in my pocket and not give anyone. But that is not something which is looked at from a very good point of view. You will be very happy if Shashank gives back to the shareholders, right? And shareholders also includes me. Please understand this, shareholder also includes me because I'm the largest shareholder in my own company. And dividends basically means if I make 100 crores at the end of the year, I might say, you know what, 100 crores, may say 50 crores I want to give back to my audience. So 50 crores I'm going to give back as dividends. Now dividends is basically nothing but profits of my entire profits, a small share of my profits I'm giving back to every shareholder. Got it? So I'm just starting again. This is the first thing that we're discussing is what is dividends. Now to give you in a stock market perspective, all of you guys know ITC, the best stock in the bull run right now. So ITC basically has so many FMCG products. They have all these shampoos and packets, etc., etc. Right? They have a lot of money. Okay. So now they go and sell all these packets to people. They make a lot of money from this FMCG. And after they take all that money, they remove all their expenses. But they make so much money that it is more than enough for their expenses, right? Now, after the end of the year, all the expenses are done. They have so much money in their bank account. Now, with that so much money, they're like, okay, you know what? I'm going to build some manufacturing plant. I'm going to reinvest it back into the company. Awesome. Good job, right? But even after that, they have so much money left. They're like, you know what, chalo, abhi we'll give it back to our shareholders. So they take the money and give it to the shareholders. Now, listen to this logic very carefully. Whenever dividend is given from a company, it means money is going out of that company Okay, please understand this. Money is going out of that company and into shareholders' pockets. Now, shareholder can be me and you, shareholder can be big institutions, shareholder can even be the promoter himself. Okay, we saw this recently with Lotus Labs. When the dividend was announced, shareholder had a lot of money coming in from the dividend side. So he moved his shares into a trust so that he doesn't have to pay a lot of dividend tax. Okay, now tax is also there in dividend. Don't worry about that. Tax is also there in dividends, but we'll talk about all of that in this episode. So understood the logic, right? So for a growing company, a company that is going to be a value company or a growth company, giving a lot of dividends out is considered a bad sign. Okay, for a growing company, you want them to take that money and reinvest it back into their own company so that they can grow, so that the stock price can go up, and if the stock price goes up, me and you can make money. But for a company that is already very big, ki itna paisa kama liya, they have so much money that I don't need to reinvest back in my business. So for example, your Reliance, too much money, ITC, too much money, government companies, too much money, right? They usually end up giving a lot of dividends. Now, what happens here is, who needs this strategy or who needs dividend investing strategy? And I made a document here. I'm going to share it with you guys. Okay, which is about the best dividend paying stocks here, made by Debjani itself. Okay, now who needs this strategy? Now, young guys like me and you, we don't have so much capital. We don't have a lot of money in our bank accounts. So young guys like me and you want growth strategy, right? We want our money to compound. We want our money to grow. We want an upward trajectory. So tomorrow we can make a lot of money. That is our agenda. Cool, because our needs are not that high right now. Not that we don't have so much responsibilities. But for people who are slightly in the older age group, say for example, someone in the age of 50 to 75 or 50 to 60 or 60 and upwards, right? Now, what these guys have done, they have made a lot of money over their period of time, right? All their life, they have made money. Now, for these people, they don't want growth, correct? Now, imagine at the age of 60, I just want, I'll tell you one very important thing that you need to understand, right? All humans, all of us, we have a job till 60 or maximum 65, unless you're in business, right? So understand this, that you can make money, you can earn salary up to a certain point of time in life, but your expenses will stay with you until you pass away. Okay, your expenses are there till the last day you are here. So whatever you make, if you're saying I'm going to retire till 60, ensure boss that by mistake if you stay till 80 from 60, you need to have 20 years of expenses ready to handle if you're not making any income. So that is why dividend investing strategy comes at that point. What is dividend strategy? Basically, I have a lot of money, maybe a crore, 2 crores that I've done over my period of time. Maybe I'm 60 now and I have 1-2 crores in my bank account. And my only job is right now, ki boss, don't make my capital go eroded. Okay, let my capital be almost the same, but I want some nice money in my bank account. Right? Passive income is what I want. Okay, this is called passive income. So I'll buy 1 crores, 2 crores worth of few shares, and whenever the dividends come, I get a lot of money in my bank account over a period of year, which is useful for my expenses, because now I can't go earn, right? My leg is gone, or my hand is gone, or my head is gone. I don't want to, I'm too weak to earn and go out and make a living right now. So dividend investing is mainly used by people who have a lot of money and want regular income. If you get a lot of money earlier on, even better. But for youngsters, usually we prefer a strategy where either you build up to a dividend strategy, you keep investing in dividend paying stocks, or youngsters would prefer growth, right? But there is no harm for youngsters right now to start investing in dividend stocks. Why? Because over a period of time, what you should do is take the dividends and reinvest it. This is strategy number 2. This is called dividend reinvestment strategy. Now, for a youngster, this is very smart. If I have invested in a particular stock and I get dividends, now instead of taking that dividends and going out and partying, right? And going out for a nice dinner with my friends, why don't you take that money? Because that's not your money. That is stock market's money that you've got. Why don't you take that dividends and put it back into the same stock? Okay, sometimes you'll be like, but Shashank, the dividend is not enough to even buy one stock. No problem, buy some other stock in the portfolio, or wait for the next dividend and put it back into the stock. But that is called dividend reinvesting strategy. Just imagine that whatever the company is giving back, you take and buy equivalent amount of shares. Next time they give dividend, you get little more money and you put it back into it. Your corpus growing. By the time from 30 you hit the age of 60, 65, just imagine what your dividend corpus will be. And if you keep reinvesting it over a period of time, imagine compounding plus dividend at the same time. Mind blown. Cool. Now, let's look at how to create a dividend strategy. Now, if you want to do this for yourself, you want to do this for your parents, this is a very good strategy that you can adopt, right? Now, there are two ways of getting paid when you invest. One is capital gains. Capital gains is the stock price keeps going up and you make a lot of money, or it is dividend. Dividend is basically the gains that you get from the market. Now we're going to look at some few relationship between dividends and market value right now. Okay. Now understand one more thing. Whenever dividend is given, okay, the market value slightly corrects by a certain amount. Okay, if a stock like ITC gives 10 rupees dividend, you will see the stock price going down for a bit until the dividend date. You will see it going up. After the dividend date, you will see it going down. Now there is also something called as ex-dividend date. You might have seen ex-dividend date is nothing but you have to buy the shares of that company before that date. Simple stuff, right? You have to buy the shares of that company before that date, and you can keep buying these shares and you keep it there. All the money keeps coming to your bank account over and whenever they start giving you the dividends, right? But the stock price will slightly get adjusted downward when the dividend is paid. So when they announce dividend, stock price goes up. After dividend date, the stock price slightly goes down. So don't worry about that. Not at all bad, because why does this logical thing happen? Because the money is going out of the company and into shareholders. So this is why you need to understand from that perspective. Now there are two things here, two things to understand when it comes to dividend, or when you want to calculate dividend, right? The first thing is called minimum dividend payout ratio, or also known as dividend payout ratio. Now this is very, very, very important. But basically, what is dividend payout ratio? Now dividend payout ratio is basically the proportion of earnings paid out as dividends to shareholders. Now if I've made a lot of money, how much of that am I giving? Some companies have a rule, right? Like some big companies be like, whatever happens, 20% of whatever I make will go back to shareholders. And this is a rule, right? Which is very good, because you want the company to make more money, so you get 20% of that money. Then we have, okay, so a growth oriented company that aims to expand, develop new products and move into new market would be expected to reinvestment all their money, right? So as I said, if I'm a growing company, I don't want dividends from you, right? I'll be like, boss, I want capital gain. So you please put that money back, build a bigger manufacturing plant, focus on sales, go to US, no problem. But if you see companies like TCS and all, they use it for different stuff, right? And I'm going to show you some of the stocks as well. This is dividend payout ratio, nothing but what is the ratio of your total amount of money that you've earned and how much dividend you're giving out is the dividend payout ratio. Then we have a very important thing called dividend yield, that should be more than 3%. These are two parameters. Okay, dividend yield should be more than 3%. Now what is dividend yield more than 3%? Okay, so it is important for investors to keep in mind that higher dividend yield do not always indicate attractive investment opportunities, because dividend yield of a stock may be elevated as a result of declining stock price. So dividend yield, basically it calculates what is the stock price and how much is that dividend amount that you're getting, divide that, you get the yield. So for example, if I say ITC has a slightly higher yield because this time ITC gave 10 rupees per stock and the stock price was only 200 to buy at that point. So 200 you buy one stock, you get 10%, 10 rupees yield over there. So that was very nice for me, right? So this is what I liked. But there are better stocks that are giving you better returns. We will look at it one by one. Okay. Now, third thing is something known as clear-cut dividend policy. Now, if you're doing dividend investing strategy, please understand you need to find out what is their dividend policy. As I told you, there are some companies that say, boss, this is a policy in our company that you will get so much % dividends every year. That's a policy in the company, right? Usually in big companies. Now, a firm's dividend policy has the effect of dividing the net earnings into two parts: retained earnings and dividends. Retained earnings means what? If I make 100 crores, I'll be like 50% I want to retain. I want to keep it back in my bank account. You don't know what will happen tomorrow. COVID might happen. Remaining 50%, I'll give it back as dividends to my shareholders, because I want to make them happy and I want to give them a lot of money in their bank account also, right? So they will be very happy about it. Now that is their dividend policy. So these three things, okay? Dividend payout ratio should be more than 40%, dividend yield should be more than 3%, and clear-cut dividend policies should be observed. Okay, if these three things are there, it is considered good. Now, what are the reasons for dividend investing or high yield dividend stocks? Obviously, it's consistent income. As I said, it is good to have some kind of money coming into your bank account, so that is great for you, number one. Second, the volatility reduces slightly. So most companies who extend dividends to the shareholders belong to defensive sectors. Very important. Okay, what do you mean by defensive sectors? Means these companies are already so big, right? These companies are already so big that, you know, they're not very volatile. So your capital erosion might not happen. Okay, but be careful, because some stocks this year would have given you a lot of dividend because they made a lot of money. But it's always important to look at historical dividend payout ratio, historical dividend yield. That is more important. Okay. Now, these are the few things why this is very important. This is mainly if you have a lot of corpus, right? If you have a lot of money, you have a lot of corpus, this is why it is important. Hope you guys are learning. Hope you guys are catching my drift. If not, please tell me. I'm a teacher. I will teach you again if you didn't understand any concept. Okay, so I'm here for you. Tell me anything you want. I will teach. Now, what are the risks associated with it? What are the problems of this stock, right? Now, even the best of the best dividend stocks are subjected to market risks, right? And another thing that I want to tell you here is that sometimes if the market is bad or the sector is bad, the stock might go down. Even though the stock is paying a high dividend cost, the stock price might go down. If stock price goes down, your wealth will get eroded drastically. And I'll show you some of them as well, right? Then now, dividend offering companies may opt to reinvest their entire profit into their business, and this would be looked at a loss because a lot of people who have invested for high dividend shares might not get high dividends at all, and then that will be a big issue. Now, let me look at some of the stocks. List of top 8 dividend stocks that are there in the market today with respect to its sectors. Again, thank Devjani for doing all this research and getting you stuff here. Let me show you this one by one, okay? Let's show you Bajaj Auto. Let me show you something. Bajaj Auto. Now, if I click on Bajaj Auto here, where do I find the dividend? You have to go to corporate actions. Okay. So what I will do is look at this. It's actually here. I'll just do all events, go to events, go to corporate actions, go to dividends. Now in dividends, you'll see this. There's interim dividend and final dividend. What is the difference between interim dividend and final dividend? So most companies, okay, most companies will give you dividend once a year. At the end of the year, whatever money I make, if I made a lot of money, very good. So much money, I'll keep it in retained earnings. So much money, I'll give it back to my shareholders. That is called final dividend. But sometimes companies will come surprise you. They'll be like, hey guys, what's up? Suddenly, I'm going to give you an interim dividend. Everyone will be like, oh, amazing, great stuff, right? So sometimes they do that, not all the time. And sometimes they do it and they also call it special dividend. So recently, Deepak Nitrite gave a special dividend, 4 rupees dividend plus special dividend of 1 rupee, around 5.5 rupees. Why? Because they completed some silver jubilee or something. So 100 years of this company they might give you special dividend also. So surprise. But let's look at the cash dividend. Now look at cash dividend of Bajaj Auto. 2017 May it gave 55 rupees. X date means you have to buy before this date. Okay. 2017 55 rupees, then 60 rupees, then 60 rupees, 17, 18, 19. So you can understand that whatever shares you buy of this, you will get 60 rupees approximately. But then this year, because it did really well and there was a lot of sales coming up and they made a lot of money, they gave a dividend of 140 rupees in the final dividend, and they also gave a special dividend or a cash interim dividend of 120 rupees. So in this year, you would have made 120 plus 140, which is around 260 rupees instead of 60 rupees every year. So you should learn how to look at dividends like this. And you see how the dividend is increasing. Ideally, I want the dividend to keep increasing. This is what is considered good. I want the dividend to keep increasing. So Bajaj Auto is one company. Let's look at what other companies that quickly. Okay, GAIL, ITC. Let me show you GAIL. Now, another very important thing. Okay, if you know what GAIL is, okay, if you know what GAIL is, basically GAIL is a company where the government has a lot of stake in. Okay, Indian government has a lot of stake in. Now, as I told you, majority of shareholding of a particular company might be promoters or might be the government itself. Now, whenever the government comes and says, or a government-based company like SAIL, GAIL, HPCL, all of these companies come and give dividend, most of the money goes back to the government itself. So that is a good thing, right? Because they also get little extra money to play around. But sometimes you see that they give a lot of dividends also. So look at GAIL. It's currently trading at 141 rupees per share. And let's look at their dividends, right? If you look at this, 141 rupees per share, and in 17, 18, 19, they've given two dividends. 17 2 times, 18 2 times, 19 2 times, right? 21 time, because I think maybe because of COVID, and I think the government did not allow it also at one point. And then 21 again 2 times. So basically this was 5 rupees, okay? And it's 5 rupees in this year. Okay, before that in 2019, it was 6 plus 1, 7 rupees in that year. So see how you can keep calculating this way. Again, this is a good company that has given good dividends. Every time there are companies that are government owned, right? Indian government owned, the money goes back into Indian government, right? Now look at this Coal India. Coal India is also very famous because it has a very good dividend yield, right? Look at this. Stock price is 158 rupees, but look at the dividend here, 12 rupees. Earlier it was giving 16 rupees, 7 rupees. 5 plus 12, again 7 plus 5. This year it has already given 8.5 rupees on a 158 thing. But you will be like, Shashank, this is awesome. Why don't I just stick to this and not worry about anything else, right? But there is a problem, guys. There is a problem. Okay, let me show you what the problem is. Let me go to Coal India and show you the max chart. Okay, look at Coal India's maximum chart since 2010. Okay, maximum chart since 2010 has not been very attractive. Okay, maximum chart since 2010 has actually gone down 50%. Even if I do last 5 years chart, I'm not going to look at last 1 year, but if I do 5 years chart, the capital, if you see, is slowly going down. Your capital would have gone down, right? Your capital erosion would have happened. So if you had invested some 1 lakh or 1 crore into this stock, your capital would now be 50 lakhs, right? Now you need to understand, if I had invested 1 crore into this stock, and now if my money has become 50 lakhs, it fell from 377 to 158, I've lost 50 lakhs. Has the dividend made up for this money? Of course not, right? The dividend wouldn't have made up for this money. So then, is this a good stock or a bad stock to invest with respect to dividend ratio? Because you don't want something that's very volatile. So this would be considered slightly bad. Okay, but if you look at, say, GAIL, okay, let's look at GAIL once more. Let me do last 5 years chart. Okay, look at GAIL. Sustenance, last 5 years, in fact, it's given 20% return, but there's sustenance. My capital has not got eroded and I've got good dividend. So this is considered a thumbs up, right? If you look at Bajaj Auto, which is also giving good result, right? Look at their last 5 years chart. Bajaj Auto is given 29% returns and given good dividends as well. So this is considered good. See, we have to also focus slightly on capital. Either the capital should be same, okay, because our dividend covers up for our inflation, the yield and everything covers up for the inflation, but it should not go down. Your money should not go down, because then you'll feel sad, right? So you want the best of both worlds. That's what I keep saying. Now, ITC is a very good example of this. Okay, ITC is like the best example of this. Why? Because ITC to hilta dulta bhi nahi hai, right? It's same year, 5 years 1% return. ITC was like, screw you stock market, I don't care about you, I don't care about the bull run, मैं अपना ही चल रहा हूँ, right? 200 rupees straight adamant from the last 5 years. But if you look at their what do you call that, if you look at their dividends, and this stock will not go too down because they're making money, they're growing slowly. Only the cigarette business is affected a little bit here and there, but look at the dividends they're giving, right? 2020 they gave 10 rupees, 2021 they've already given 10.75, 2018 they gave 5, 2019 they gave 5 rupees, and this is all 5 rupees on 231 rupees. So that is why ITC, okay, because it does not move too much and it gives amazing dividends, ITC is like the darling of dividend stocks, right? Or darling for dividend companies, or whoever wants dividend investing strategies, these guys love it. So this is basically ITC. Now let me just show you quickly, let me go back and show you all these companies here, right? These are all companies that are stable. Okay, they're not too volatile. These are all companies that are slightly stable and they give you good dividends as well. Cool. So I'm going to show you these 8 stocks, and assuming you do a dividend investing strategy, let me create one for yourself, right? Where is this? Okay, let me just create one for you. Let's call this dividend investing strategy. Again, guys, this is not a recommendation to buy or sell. Please do your own research about all those 8 stocks. Don't just depend on me. I'm again telling you this again and again, okay? For passive income. Just to track, this is for our educational purposes to track, so please don't get over excited and then come and shout at me later. I'm being very clear right now, okay? Bajaj Auto, I'm just putting all those stocks here, okay? Chalo, Bajaj Auto, GAIL, ITC, Hero, GAIL, ITC, Hero Motocorp. Then we have Oil India, Emphasis, TCS, Infosys. Now, have you observed one thing, okay? Oil India, Infosys, TCS obviously is very good, and Emphasis, okay? And I also wanted to check one more. ONGC also gives a lot of dividends. I want to check ONGC once, whether its last 5 years has been up or down. ONGC has given you negative returns in the last 5 years, minus 16%. But ONGC also, because it's predominantly held by the government holdings, you will see good dividends, but not worth your this investment. So these are the 1, 2, 3, 4, 5, 6, 7, 8 stocks you can save. Now, if you want to, minimum investment amount is what? 26,397. Now, if you want to find your own stocks, right? If you want to do a screener quickly, I'll show you how to do that as well. Go to add filter here. Just search for DIVIDEND. You will get, first I want 3-year historical growth. Yes. Then I want dividend yield. And then we had dividend payout ratio. Correct. This dividend payout ratio. These 3 things more than enough. Remember, we did the ratios right now. Okay. Remove this. Market cap. I can actually put mid cap, 5,000 above. Let me just put 5,000 here. Cool. Now, 3-year revenue growth, dividend growth, even if it is 5% to 132 apparently. So 5% to 132, which is a max. I'm going to keep this here. Dividend yield was what? 3% minimum, more than 3%, 3% to whatever. Payout ratio 40% to whatever, right? Just doing a rough math like this. 1 second, something is not right. Actually, this you don't need. 1 sec, this you don't need. These two things are very good. Now here, when you do something like this, it directly shows you the Mindspace REIT. Why? Because REITs are predominantly in the past supposed to give you good dividend payout ratio. So a lot of people are investing in REITs also, right? But if you don't want that, assume you do this, right? Assume you just say dividend yield is gone, dividend payout ratio, which is too much here, just put it 0. You'll see all the big companies here. So ideally, if you remove the payout ratio, okay, ideally if it's 40%, great, but a lot of people might have changed it. But if you remove the payout ratio and just keep the dividend yield as a trigger to check it out, you can see here all the dividend yields that are there. You can filter it according to up, down, left, right. So BPCL is giving a massive dividend yield of 18%, Coal India. But again, check if they've given it in the past as well and not just now. REITs are predominantly good for passive money coming into your bank account as well. But again, you have to look at something that has given predominantly. India Bulls also gives you good dividend yield. So this is a quick way to find out. Again, you can do your own research on this. Yeah, and one more thing I want to tell you guys. But again, please do your own research. Again and again, I'm saying this. Ideally, if you ask me, I would go for the government-ish stocks. Why? Because they don't move much. But again, ONGC fell down. So a little scary about that. Coal India also fell down. So it's very difficult to identify what will be there for a long period of time. But just I love IT stocks, so I predominantly go for IT stocks because IT stocks are devoid of inflation risk. They only have risk of rupee depreciation. Right now, if you be like, okay, Shashank, this is too confusing, I'm going to show you one free and one paid small case for you guys. If you guys want to automate this process as well. So if you look at the free one, which is called Dividend Aristocrats, see what they have. Asian Paints, consistent compounder, good dividend as well, right? If you want, we can check that also. Let's check. Wasn't Asian Paints here? I think I saw it once. Okay, let me just check. If I go to Asian Paints, 5-year returns will be good only. Yes, so Asian Paints returns are very good. Let's look at the dividends, interim dividend. Oh yeah, not bad at all for a company that is also growing, giving you 200% return and giving you good dividend. So this looks good. HUL obviously gives good dividend and a very safe stock. HDFC, which is parent company of HDFC Bank. Infosys, ITC, this two to be found. La Opala is something a lot of people are investing now recently. I should actually do a video on this. A lot of buzz in the market. Persistent System good. Pidilite also good. Reliance is also good, right? So see, this is such a safe kind of a bet. I mean, if you just look at the stocks here, you will see that these are all safe. Might give you a slight upward movement as well, but this also is quite safe. So this is not bad at all. So I like this. Only La Opala I don't know because I have not done my research on La Opala, but only La Opala feels a bit off. But I know for a fact a lot of people are investing in La Opala. Look at this. It has a market cap of 3,500 crores. Let me check this company out. But apart from La Opala, I think everything is in the mid cap, large cap space, and everything is good from a long term consistent compounder perspective. Minimum investment 40,000. Okay, cool. What else? Show me how you show me returns. Good returns, beating the equity large cap as well. Not bad at all. Okay, so this looks good. So yeah, if you want to do it, it's free, completely free, so you can do it whenever you want to, or you can invest in your own custom small case after doing your own research. I'll show you one paid also. Now paid, obviously I can't show you the stock weights because you have to subscribe to it, but if you want to do a paid kind of a thing, then this also has beat the equity large cap index. This is I think by Green. Yeah, this is by Green Portfolio, so you can invest in this if you really want something which is more than the Dividend Aristocrats. If you really want a proper strategy, then you go for a paid one. If you don't want a proper strategy, you go for the free one. The free one you can start with 40,000, but if you want to go with the paid one, you have to have a minimum amount of 5 to 10 lakhs, or else it won't make sense because you're paying an amount of 3,500 for 6 months. Now what are these? These are 15-20 companies giving good high dividend yield, strong balance sheet, low debt. Why? Because we don't want debt on the company. If it's a debt making company and it's giving dividends, big problem, right? Good management integrity is something you need. Multi-cap strategy, obviously, because you want in different caps as well, and available at reasonable valuation. So this is the paid part. So these are the two things here. Actually, I've shown you 3 things, 1, 2, 3. So again, you can do your own research. I'll share the links below after the live gets over. I'll share this document also because you can go look at each of it later on. You can go read about all the risks that are associated with this and understand. Please understand before you do dividend investing strategy that dividend investing strategy is something where you want to keep your capital preserved. Number one, it should be capital preservation, and get consistent dividend income as well. Now this only works really well either when you build up to a big corpus or a very high corpus, or you already have a big corpus. Maybe your parents are investing their PPF amount, or maybe your grandparents are investing their amount, or maybe you just sold a piece of land and you got a massive investment coming in and your parents cannot do a job. Maybe your dad's retired but he's got his PF right now or PPF, and you want to do something with it. Now a lot of people would go invest in fixed deposit. Dard, right? No, don't do fixed deposit. It's not good. So rather, why not get the best of both worlds? Start investing in companies like Asian Paints and Pidilite and Persistent. Good growth in these companies as well, and they give you good dividends for either yourself or either for your family, right? So both of it is considered on a good note. But be very careful, because there are some stocks, like as I showed you, Coal India, that is giving amazing returns, okay, but might not give you good capital appreciation. There was also some power stocks over there that I saw in the screener, but power stocks also sometimes are very sector oriented, so that might also create an issue for you. Understood? Okay, first, please click on the like button, because I've been screwing my throat left, right, center teaching you guys on this. But again, guys, I want to tell you guys that I hope you understood what dividend investing strategy is, what is dividend payout ratio, what is dividend yield. These are the few things that you need to understand when you're investing in dividend paying stocks. Ideally, if you want a very big corpus amount for passive investing, then you need to invest a high amount for it, because not only will you get your capital appreciation if you invest in good stocks, but you will also get nice dividends coming into your bank account, right? So if you're going for a dividend investing strategy, then you should focus on what is the nice payout ratio that you are getting. But if you're going for a growth rate strategy, then you have to invest in that. Okay, if it's a growth rate strategy, you keep going there. Now let's assume you invest in, say, Asian Paints, or let's assume you invest in that small case that I showed you, right? Okay, not this small case, but let's assume you invested in any small case, right? And let's assume either your current portfolio is only 40,000, so you have to keep building onto it. So if you're young and you're investing in dividend companies, my strategy to you is invest in dividend companies when you're young. Start doing an SIP, and whenever you get dividends, reinvest that SIP into this, right? Ideally, what you can do is you can keep reinvesting this amount back into this. It's called dividend reinvestment strategy. So you can keep reinvesting back. But if you're investing your parents' money, they'll already have a corpus of 1 crore, and that will give you a good yield of over a period of time, maybe 5, 6, 7% of dividends, depending on how good the year is. So that anyway beats your inflation, beats your fixed deposit, and it gives you capital appreciation. Two things. Right? Not only will you get dividends, which is 5%, which 5, 6, 7%, which your fixed deposit is just going to give you 5, but this will give you capital appreciation as well. So if you invest 1 crore, you can take 5% out of that. Very good amount, right? And if your parents have saved even more, then even greater, right? Because you get good capital appreciation, and by the way, that compounds. Okay, that compounds, because the dividends will keep going up. The dividend payout ratio will be the same, but if the company makes more and more money, you see how the dividends keep going up, right? I hope you saw that. Don't think of it as the same 5% only, because if you keep getting more stocks, you'll keep seeing that the dividends keep going up as well over a period of time. In 2017, this was giving 2.6, 2.7, 3.7, 1.3, bad year maybe 14.3, right? You see how dividends keeps going up for Asian Paints. So this also compounds. Got it? Awesome. Chalo, awesome. Again, thank you, Deb, for doing an amazing research on dividend paying stocks, or understanding how dividends basically work. This is very good for someone who wants to do passive income. Either you can take it and go party, club and enjoy, or for your monthly expenses for your parents, or you can opt to reinvest that entire profit back into that business as well. So I hope this helped a lot for you guys. I hope you guys learned a lot. Again, if you like this episode, please click on the like button, share and subscribe, and I'm going to come and do more videos for you guys as well. I think what's pending is I need to talk about the pharmaceutical sector industry review that I'm going to do next week. I'm also going to do a crypto video where I come and talk to you about this ban, which everyone's getting frustrated about the ban. So please don't worry about the ban. If you read carefully, it's written private cryptocurrencies, but I'll come and explain all of it very clearly. And then on the weekend, we do our weekend research session, and we are done for the month of November. Right? Again, I hope you guys are learning a lot. I hope you guys keep understanding. If you're not learning, please let me know. I'm happy to just come and do sessions just to teach you guys again. So please understand that. Please learn that. Okay. This is me, Shashank Udupa, signing off. I'm going to come and do a crypto video soon. I'll put the links below as well for anyone who wants to go check it out. Okay. Chalo. Bye. See you guys. Take care. This is me, Shashank Udupa, signing off.